We think UK equities have like room to perform here.
Right,
you know that the energy complex is certainly a nice tailwind for the market. I think we do have preferences for other regions, but you know the low weighting. It depends who. If we're looking against the MSCI World, actually we have a little bit more, but against like UK wealth managers, we probably do have a little bit less. But in preference of sort of a US market, for example. But you know there is certainly value and good momentum for the UK market.
But you're not raising your weighting at this point?
Not at this juncture, no. I think we favour equities, but I don't know if it's sort of cowardness, but sort of trying to sort of thread the needle between sort of being pro-risk, but also recognising like there are some recessionary risks that prevail, and that the dollar and longer duration US assets that populate the US equity market sort of might perform better in that sort of downturn. But you know, there's certainly like if all goes swimmingly, then probably that UK equity position would continue to outrun the US position that we favour.
Fortunes have been lost underestimating the US market and the US economy and its ability to sustain high valuations. But the problem is it does have a very high valuation, and I don't know where the valuation support is for the US market. Maybe you can tell me.
Well, I think it's quite well supported here on the back of sort of what's happening at the long end of the bond market. There is the inflationary challenges do seem to be receding. I think it could be tempered by some hawkish commentary here and there from central banks, from the Federal Reserve. But ultimately, I think the inflationary challenges are moderating. And actually our growth challenges as well, and that should allow bond yields to be capped, I think, in and around where they are, could even drift a little lower from here, and that would be good news and supports the US stock market valuation.
So you're looking for inspiration in the long positioning of the US market from the bond market and the macro, not from what I said, which was the actual valuation of the equities themselves?
Well, I think valuations are quite closely underpinned with what's happening in the bond market. That's not the sole.
Valuations are at multi-year highs compared with the longer-term valuations. I mean, everyone looks at the last 5 years S&P. I don't. I look at the long valuations, and actually, historically, we're talking about somewhere between at trough valuations in a recession or in a downturn. We're talking about 9 times. We're trading at 22 times.
Yeah, I mean, there's nothing sort of dramatically cheap in the valuation story. It's just what's going to sort of drive the next move, and we wouldn't have said that valuations and a recessionary or a growth challenge outcome isn't sort of great news for the earnings story. But the valuations, a dramatic move lower in valuations, we can't quite square if bond yields are going to move lower as well. But that's not the sole reason why we would like US equities, but it's one of the underpinning supports.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.